Welcome to today's market report. European stock markets are seen opening largely lower on Wednesday, weighed by the rout of technology shares on Wall Street, as well as concerns about the increase of coronavirus cases. The DAX future traded 0.2% higher, CAC fell 0.2% higher, FTSE dropped 0.4%. The sell-off in big tech stocks continued on Tuesday, resulting in large losses overnight on Wall Street. The Dow Jones fell 2.3%, S&P down 2.8%, Nasdaq slumped 4.1% into correction territory, with losses of about 10% in the past 3 days. The performance of Wall Street is going to leave a heavy residue, and most noteworthy is how the tech names dropped down quite aggressively. Investors will take a close note of that. The number of global coronavirus cases continues to rise, breaching the 27.5 million level as of 9th of September, according to Johns Hopkins University's data. Oil prices weakened on Wednesday, continuing the previous session's sharp sell-off, which saw the international benchmark Brent contract traded below $40 a barrel for the first time since late June. The oil market will have a lot to digest during the session, with OPEC monthly report and the Energy Information Administration's short-term energy outlook due for release later Wednesday. Additionally, the weekly API report, due a day later than usual due to Monday's holiday, is likely to show another draw in crude stockpiles for the week ended 6th of September. Crude futures traded 0.3% lower at $36.66 a barrel. Gold futures fell 0.4% to $1,935.95 per ounce. On the FX front, GBPUSD seesaws in a choppy range between 129.20 to 129.40. The cable prints a 0.25% daily loss as taking runs within a small trading range near the lowest since late August. The fears of no-deal Brexit and recall of the coronavirus-led restrictions weigh on the quote. The pair marked the heaviest drop in 6 months the previous day after Tories flashed hints of editing the WAB and warned the European Union over the 15th of October deadline. Adding to the market's pessimism, AstraZeneca announced a halt to its third phase of COVID-19 vaccine trials, which in turn derailed the hope of the UK getting the pandemic's cure by early 2021, as Health Secretary Matt Hancock initially suggested. The move dragged the UK 2-year gilts to record low and refreshed the multi-day bottom of the pound, though news that the halt was routine joined China's August month employment data to trigger the risks reset. Even so, the British pound volatility index rose to a 3-month high, according to the UOB group. In light of the recent price action, the cable would now slip back to 128.55 level in the next weeks. EURUSD has reserved higher from significant support at 117.57 in Asian session. More substantial gains will likely remain exclusive if Eurozone bond yields extend yesterday's decline. The European Central Bank said the bank will deepen the pressure on the big European banks, asking them to prepare for Brexit once again as the summer draws to an end. EURUSD has once again bounced off the strong support at 117.57, heading back towards 118 as the dollar bulls take a breather, while attention turns towards the ECB policy decision due tomorrow on Thursday. The 10-year German bond yield fell by 5 basis points to minus 0.51% on Tuesday, and its Italian counterpart declined by 3 basis points to 1.03%. The yields are likely to remain under pressure today as Asian stocks are flashing red and oil is extending Tuesday's 6% decline. In other words, markets are likely to remain risk-averse. The dollar found support today as the stock market slide spooked investors into selling riskier currencies. Dollar index is trading at 93.532. This is today's market news. Thanks for listening. We'll see you next time.